In this video, we're going to be using exercise 3-4 to illustrate how to prepare the journal entries related to a job order costing system. In transaction A, it says that $86,000 in raw materials were purchased on account. If you get it, you debit it. So the first account we're going to debit is raw materials because that's what we purchased. And that will be a debit of $86,000. In most businesses, when you buy raw materials, you're going to owe for those raw materials. So we would credit an account called accounts payable for a same amount. Remember, your debits have to equal your credits for each transaction. In transaction B, it says that $84,000 in raw materials were requisitioned for use in production. Of this amount, $72,000 was for direct materials and the remaining was for indirect materials. When you requisition your raw materials from the storeroom, they're going to go to work in process. That work is going to be done with those materials. The direct materials were $72,000. We know that the raw materials that came out of the storeroom, so we're going to credit raw materials for $84,000. The difference must be those materials that are going to be used as indirect materials, which will be part of manufacturing overhead, and that difference is $12,000. In transaction C, it's a similar transaction, but this time it's for labor. Total labor wages of $108,000 were incurred. Of this amount, $105,000 was for direct labor. The direct labor is also work in process. That labor is being used to process a unit, and that's $105,000 that will be debited. We know that the total wages payable, and you can use an account called salaries payable, depends upon the company, was $108,000. Excuse me, if the total labor was $108,000 and $105,000 was for direct, that means that $3,000 must be for indirect labor, and indirect labor goes into manufacturing overhead. In transaction D, they talk about the additional manufacturing overhead costs were $197,000. Actual manufacturing overhead costs are going to go to a debit account for manufacturing overhead, and that's $197,000. Now the credit account could be a whole bunch of different accounts. It could be for accumulated depreciation on factory equipment. It could be a credit to prepaid insurance or possibly even prepaid rent for the factory. So those credit accounts could go to various different accounts. In review, if you take a look at these transactions, in transaction A, we received raw materials and we owe for them. In transaction B, we took those raw materials out of our storeroom and some of them went to work in process. The rest of them were indirect materials, and by definition, indirect materials go to manufacturing overhead. In transaction C, we're processing our labor costs. So we have wages payable. Some of those wages payable were direct labor, so they go right to work in process. The indirect labor, by definition, goes to manufacturing overhead.